I think you're going to get a price of $1 million or 2 million potentially. Even you could get something. Multiple might come down, etc. But you get the general drift, right?
Yeah.
There's no lack of firepower getting us to 500,000. None. We could go to 1 million. We could go higher. There's so much money on the sidelines, which is sort of the mirror of us being in such a debt position, right? We've been living on fiat for so long that we've produced so much fiat that there's just this mountain of fiat that is out there, and it's for 11 months now. It's starting to find its way into Bitcoin, and it's just starting. First of all, it's not 100% sure that we're in an S curve, right? We're in something at this point which is very statistically close to a power law.
Fred Krueger begins by highlighting the sheer scale of the U.S. financial market. With approximately $46 trillion in equities, $46 trillion in bonds, including corporate and municipal, and $6 trillion in cash, traditional finance, TradFi, represents an immense $100 trillion market. Despite Bitcoin's increasing prominence, institutions currently allocate only a fraction, roughly $100 billion, into Bitcoin via avenues like ETF and companies like MicroStrategy. This equates to just 0.1% of their overall holdings. Krueger sees this as a massive opportunity. He predicts that institutional allocations could easily increase tenfold to 1% over the next few years. This influx of capital, estimated at $1 trillion, would likely propel Bitcoin's market value significantly, given its unique market dynamics. Krueger explains that injecting $1 trillion into Bitcoin, an asset with a current market cap of approximately $1.4 trillion, could result in a price explosion. Applying a typical multiplier of 30, such an influx could drive Bitcoin's price to $1 million or even $2 million per coin. While these numbers may sound lofty, Krueger argues they are plausible due to the overwhelming amount of fiat currency circulating globally and the growing recognition of Bitcoin as a viable asset class.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
If you look at kind of just the US market, right? US stocks, it's about $46 trillion. US bonds, about the same when you throw in corporate bonds and munis together. And then you have cash that's about 6 trillion, right? So you put all that together, it's about $100 trillion, right? Well, how much do these TradFi guys have of Bitcoin? Well, it's pretty easy to see. What are they going to own? They're going to own the ETFs, right? Or they're going to own MicroStrategy. Those are the two things that they can own. And, MicroStrategy is worth about $40 billion. And the ETFs are worth about $60 billion. So it's about $100 billion, right? So roughly speaking, they've got a $100 billion position in an asset of a total $100 trillion. So they own about 0.1%. That's how big they are.
Yeah.
They're a tenth of the percent in. So what I think is that, for that tenth of a percent to get to 1% is not at all a stretch. I just think that's a given. That will happen, Will it happen over the next year? I don't know over the next year, but over the next 2-3 years, I think we'll get there. And I think if you throw $1 trillion into this market, which is kind of what I think we're talking about, right? Putting $1 trillion into Bitcoin, into an asset that's currently worth 1.4 trillion, and you put a sort of a normal multiplier of 30 on this thing, which is kind of where these things tend to be. I think you're going to get a price of $1 million or 2 million potentially. Even you could get something. Multiple might come down, etc. But you get the general drift, right?
Yeah.
There's no lack of firepower getting us to 500,000. None. We could go to 1 million. We could go higher. There's so much money on the sidelines, which is sort of the mirror of us being in such a debt position, right? We've been living on fiat for so long that we produce so much fiat that there's this mountain of fiat that is out there, and it's for 11 months now, it's starting to find its way into Bitcoin, and it's just starting. And so this, regardless of who's elected, this mountain of money is coming for your Bitcoin. First of all, it's not 100% sure that we're in an S curve, right? We're in something at this point which is very statistically close to a power law, right? Does that turn into an S curve? That remains to be seen. That basically, when a lot of people think about an S curve, they think that we are about to accelerate into sort of the bottom of the S curve. And I think that's unlikely. I think the S curve, kind of S curve that we might be in, is something called a Weibull distribution, which actually means that it just sort of tapers out. So it is a little bit like an S curve, but it tapers out. So that's just a mathematical kind of difference between some of the typical S curves, which are called logistic S curves. And so I don't expect a massive increase like a hump that we're just suddenly going to go completely ballistic and then taper out. I think we're more likely to continue what we are, but maybe really start slowing down in something like 20 years, right? So I think we're in the very early phases. For now, I think the Bitcoin price is behaving very much like a power law. And what it does 20 years out, I don't know. I don't know if I'm going to be around to know. But I can tell you that right now it really is a power law for now. Data series of 3, right, to say it crashes every 4 years. I don't necessarily think we may repeat that this time. And the reason I say that is we have institutional adoption on a level that we have never seen. We have mining rewards that are getting smaller and smaller and smaller. So I think the impact of mining is just not going to be noticeable in the future, unless you're a miner, right? In which case, I do think those halvings are going to be significant. But I think that I think we're going to be more into the sort of final stretch of the maturity of Bitcoin, and I think it's going to be more like the stock market over the last 10 years. We didn't have 4-year cycles in the stock market. I don't necessarily believe that we will have another 4-year cycle. I think that may be over. Doesn't mean we're not going to have bear markets, right? We could have big bear markets, but we don't necessarily. They don't need to be timed around halvings. There's no real reason why this mining reward thing is bearish at all at this point. And there's a lot of reasons why you might think, especially with institutional adoption, that it's not going to stop in 2026. And I think, for example, Matt Haugen of Bitwise said it really well.
Yeah.
He said, look at the gold market, right? When we did the gold ETF in 2004, we had gold inflows, not just for the first year, but not the second year, not the third year. We had gold inflows for like 6 years, or 7 years. And even though the price peaked, I think 5 years out, the inflows kept it going even after that. So I think we are in a very long cycle of inflows into Bitcoin as an asset class. And I wouldn't be too caught up in these mining, I'll call them just mining cycles. Having cycles. I don't think these things are relevant anymore. So that's what I say as far as the cycles. Now, as far as how far can we get in, say, the next year or two, I definitely think 500,000 is reasonable, right? And how do I sort of roughly get to these numbers?
Over the next 2 years, Krueger considers a $500,000 Bitcoin price feasible, supported by power law dynamics. He explains that Bitcoin's fair value could reach $120,000 within a year, with potential price peaks at 2 standard deviations above this level, approximately $500,000. However, Bitcoin's volatile nature means that these peaks may be short-lived, followed by significant retracements, This volatility, according to Krueger, is not a deterrent but rather a feature of Bitcoin's growth. Investors should focus on long-term allocation strategies instead of trying to time the market perfectly.
Well, roughly speaking, if you look a year from now, at the power law sort of says that the sort of fair value is going to be around 120,000, something like that, right? Now, the power law, to simplify it dramatically, it will sort of say, if you double that, that's kind of one standard deviation, right? So 250,000 is one standard deviation above it, and 500,000 would be sort of two standard deviations, right? Now, two standard deviations is not really super sustainable, but it has happened in the past quite a bit. Right? We were there in 2020. We were there in 2017, right? In 2017, it was even more than two standard deviations. So do I think it's possible? Yeah. Do I think if it goes there, it probably will retrace back pretty quickly? I also do, So I think we could get to 500,000, but then we could crash all the way back to 250,000, right?
Yeah.
So it doesn't, Bitcoin does not spend an enormous amount of time at these kind of, peak levels. It gets there, it spikes up, it spikes down. That's kind of what it does typically. And I just don't think as a Bitcoiner that your goal is to try to hit the absolute top and sell everything either. Your goal potentially is you're going to peel away some, if you want at all to peel away some, as we get kind of on the higher side, and then maybe buy back that some if we go down to more fair value or through fair value. But I do think we could, I don't think 500,000, like if we get to 500,000 in 2 years, I would not be shocked,
Yeah, I agree.
And I also may have sold a little bit of my Bitcoin before then. Not a lot, but just a little bit, because the way I approach this is sort of like, I kind of feel like, to simplify it, I think your best allocation is some percentage of your net worth in Bitcoin. And you rebalance that something like once a year. You know what I mean? And, if you're sort of 70% in Bitcoin and then Bitcoin doubles, well, now you're not 70% in Bitcoin, right? Because the rest of your portfolio probably hasn't doubled. So you're probably 85% in Bitcoin, right? So, maybe at that point you peel off 15% and you get back down to 70% of Bitcoin, right?
Yeah.
So I think there's going to be a little bit of that going on, not just, institutions, I think, who bought Bitcoin and who got to their full allocation will do that. But I think a lot more new guys are just coming in and they're just going to buy.
Krueger challenges the conventional wisdom surrounding Bitcoin's 4-year cycles driven by mining halvings. He argues that institutional adoption and declining mining rewards have diminished the halving's influence. Future bear markets may occur independently of halving events as Bitcoin matures into a mainstream asset. Instead, Krueger believes that Bitcoin's trajectory will resemble the stock market's long-term growth with occasional corrections rather than predictable 4-year patterns.
Please like and subscribe my channel.